Good afternoon. We're going to take a quick look at the NASDAQ now. You can see that last week we broke through the 6,800 area and we reached lows of 64.42. Our weekly pivot coming in today will be 66.03. Now currently we are trading above their pre-open. We've got another 45 minutes to go before we open. So if we can open above this weekly pivot, then there is a chance that we can correct and go back towards the 6,800 area. You may even find that we can go to 69.35, which is the 55-day week moving average. But the level I'm interested in is over here, okay? This low here of 61.64. The reason I'm interested in that is because I do believe more and more that markets do like to gravitate towards either their yearly high or the yearly low or the yearly opening price, whatever way you want to dress this up. And we've done the yearly opening price, we actually did the yearly high, and so the only other alternative is the yearly low at that 61.64 area. Now obviously you've got the 38.2 that's coming in at 62.43. And can we marry that up with any of our weekly pivots? Well, we've got one at the S2 on the weekly at 62.04. So yes, we can marry that up. So anywhere between that 62.43 and that 61.64 is going to prove to be quite a good support area. And as we know, in a bull market, which I think we're still in at the moment, markets can correct back up to 38.2. That's what they do. We've done it, we've seen it over the years, time and time again. Is this one different? Is this the start of a bear market? Well, it's a bit overdone for me, but I don't know, I've just got this sneaky suspicion, and it's totally unfounded, I know, but I just got this sneaky feeling that this could be the start of a really good bear run on all stock markets. I'm not talking just about the US, the UK or the Europe, I'm talking about stock markets as a whole. So we need to be really careful, okay? The buy dip scenario will only apply until 61.64, and at that 38.2. So you've got leeway, you've got nearly 100 points there to be able to buy. If we break the yearly low and stay below the yearly low on a monthly basis or a weekly basis, then we're going to go into 2019 in a really bad state. We are. And if you do measurements and measure targets, it's not looking pretty. But that's all conjuncture at the moment. We need to get through November and through December first. But, just bear these levels in mind. Let's have a quick look at the daily. Now, that is looking pretty yucky, unfortunately, that chart. We did break below the 78.6 at 64.90. We didn't close down there, obviously. We closed not too badly off. Now, our daily pivot is at 65.47. So we're above that as we go into the US session. As I say, we've got about another 45-50 minutes to go. But you've just got to keep your eyes on these major levels. You really have, because I've taken the fib from where we based back in February up to where we've got the double top in the NAS, and breaking below this level isn't good. It doesn't send a great signal. You've got this 0.886 and you've got all this support round here again. Now that's coming in at 63.38 to 63.26. So it's not the end of the world as yet. We've got a way to go. But I do still think we go down to here. What we do from there is anybody's guess. I think really we do need to see a bit of a rally, because since October it has been a one-way street for 2 months nearly. So we need to get this market not to be so oversold and rally a bit so that we get a chance to go in and sell it at higher levels. I'm looking at the monthly pivot, which will change next week, obviously, and we're so far away from that monthly area there, which is coming in at 70.85. We're way, or 70.80. We are way below that. Okay, I don't think that's got a chance of being reached by the end of the week. But in this job, I've learned never say never. Have a great afternoon, and I will catch you all tomorrow.